All right, good morning, everyone. It is 8:38 in the morning of September 15th, 2022, and this is my pre-market strategy session. And so today the title of the video is Consolidation Before the Next Leg Down. And basically what we're looking at here is, these are the cues. This is the daily chart on the cues. This is where I'm starting the pre-market strategy session this morning. And it's really quite simple. There's this low over here, close. This is the close. This actually isn't the low. This is the close on the 26th of July, which represents the closest reference point for support and resistance. And so here we are. After the CPI report came out, and CPI is quite a bit stronger and is evidently more persistent than anticipated. Certainly not transitory. I think it's going to be here for a while, possibly 2 years. We'll see. Certainly into 2023, which if inflation started in, I think inflation really started in late 2021. So yeah, into 2023, we'll see how long it takes for the Fed to finally get inflation down. But anyway, this price right here, 294.37, is going to be roughly that price range right there is going to be support and resistance. And I'm looking for probably, let's see, today's Thursday, is that right? Yeah. So looking for probably another day of consolidation in this range right here, and then we'll see what happens going into the weekend. People don't like to be in bearish markets. Wall Street doesn't like to be long over the weekend. Bad news over the weekend can be, exacerbated, and another big move to the downside can occur over, and open up on a Monday morning, several points lower than Friday's close. And so my guess is that Friday is going to be a rather red day. We'll see what happens. So here we are in this range, and the VIX is still in the range between 20 and 30, which is really choppy. And so, you can see here, the VIX is just making higher lows here. Higher low here, higher low here, another higher low here. And so the VIX is elevated, and I imagine there will come a point in time when, the VIX starts staying in the 30s, and that's going to be ugly. That is going to get ugly. So, timing is everything for trading. So today, I'm taking it kind of easy. I am looking for opportunities on the downside, which means that I'll be using the relative strength strategy that I like to use. This is the 1 minute and the 10 minute. And when both of these relative strength indices are coming out of overbought in conjunction with both of the 1 minute and 10 minute VIX relative strengths coming out of oversold. So when the VIX starts coming out of its oversold position on both the 1 minute and the 10 minute, that means, selling is about to ramp up. And if that is in conjunction, if all four of those relative strength indices signals line up at the same time, so the Q's coming out of overbought and the VIX coming out of oversold, that's a short opportunity. And that's just what I'm going to sit here and wait for, and that's it. I will not be taking trades outside of those parameters. So it's just kind of a butt in place, sit here and watch the screens, and when everything lines up, that's when I take the trade. And that's, really, that's pretty much it. The overall scheme of things is bearish. It's just bearish. There it is. There's our bearish pattern in place. And it really is acting in a textbook fashion here. I don't know, I've had this line in now for a couple months, I think, and it came in, touched it, failed, touched it again, failed. Bitcoin, very interesting here. This is the neckline to a head and shoulders reversal pattern. I tend to not trade. I don't trade Bitcoin at all, actually, at all whatsoever. This is just really, Bitcoin acts as a really good barometer for risk on, risk off. When Bitcoin is running up, there are buyers in the market. But when liquidity dries up, which it's doing, and the Fed is going to keep raising rates, going into persistent inflation that's over 8%, the Fed has to raise rates. So the Bitcoin's trajectory is bearish. This is the neckline from the head and shoulders pattern, and so it's going to roughly follow this pattern here, this trend line here. It can poke above and stay above, but eventually it'll just come back down. And a really good example of a head and shoulders reversal pattern and the price trend following the neckline is BABA. So back here in the late 2020, BABA put in this head and shoulders reversal pattern, and it's just moved right along the neckline here for the past 2 years. And you can see here, early in after the reversal pattern, price tried to come back up and break above the right hand shoulder, which would negate the pattern. If price breaks above the right shoulder, the head and shoulders reversal pattern is no longer applicable. However, it came really close, but then failed, and has just tracked that neckline since. Eventually, BABA will turn around and start going back above the neckline, put in a bottom, and it could even be soon. I doubt it. I think the global economy is in for a sustained downturn. I hope it's short. But there are a boatload of banks, Wall Street banks, and just sort of everyday banks that are warning. And then there's the World Economic Forum, the IMO. I don't know. There are all sorts of places. There's like, oh, it's bearish. Everything's going, the hell in a handbasket. So, yeah, it's bearish. Pick your opportunities carefully. There will be times to let your shorts run. And I think it's when it gets closer to the top end of the range. And so really that's kind of it. Here we have the 10-year, 2-year spread. This is the zero line. And so right now you can get 397, as of this moment, you can get 397 more basis points off of the 2-year than you can the 10-year, which is, the opposite of what is typically very normal. Now, also keep in mind, I have these, let me pull this to the weekly real quick so it's easier to see. So here we have the inverted yield curve in the 80s, late 80s going into the 90s, inverted yield curve in 2001, inverted yield curve in 2007. And these blue marks right here, these blue lines, mark the start of the downtrend in the market, and that's after the yield curve starts to normalize. So if history repeats, and here's the 2021 or 2020, late 2019 into COVID, if history repeats itself, we haven't even seen the worst of the downturn yet until after the yield curve starts to normalize. It's when the yield curve starts to normalize right in here that the stock market really starts to take a dive. That's that's when we start hitting the crazy 7% down days and stuff in these regions right in here. If you want to go back and look, this is roughly the 23rd of July. It's the week of the 23rd of July, 1990. The 2nd of January 2001 is when that crash started, and May 2007 is when this crash started. So we're already in a downturn on the market, and if the yield curve starts to normalize again, you can expect much lower prices to come in to the market. So we haven't even started to the downside on this thing yet. It's scary. So, all right, everybody. That's going to be my pre-market strategy session for the day. Again, I'm just trading the RSIs, and I don't know. I might go for the dollar here with a breakout above recent highs here over 29.61. This is the up. Let me go to the risk range levels here. Let's see. Risk range plays. Here's the dollar. Yeah, so a breakout above the high here at 110.45. That there ought to be a quick trade there. I wouldn't hold this one for more than an hour or so really for a breakout above that level. All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.